Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about stock market, ladies and gentlemen. If the Federal Reserve does a pause, this is great for real estate investment trusts. This is great for ETFs. That means they can make plans on capturing some of the profits. And guess what? The stock market is down year over year over year, and therefore any 5, 10, 15, 20% increase, you will be able to make a lot of money. But today, we're going to be talking about dividend investing. How would you like to average somewhere between 15 to 20% annually on money that you invest today, potentially for the rest of your life, or as long as the dividend fund is giving out dividends? But you're going to have to do your own due diligence. But stay tuned. Come along for the ride. This is passive income at its finest. And welcome. Stop struggling now. Gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, please share the videos. You never know who you're going to be able to help, because there's a lot of people out here who has a little bit of money, who's thinking about investing, who gives their money to the 401ks, and they're very happy to earn 6, 7, 8, 9%, 10% in some occasions annually. But that changes annually as well. But how would you like to lock in 10%, 11%, 12%, 18%? Now and indefinitely, potentially, dividend investing, ladies and gentlemen. And we will even get into ETFs. And if you stay long enough and watch till the end, I'm going to go over something new that you may consider, because AI is all the rage. And we're going to talk about a stock that I love, and it has went down so much. Now, if they still proceed to give out dividend stocks, you will be well over 20%. But we're going to start small, and then we'll go up and rise up to the top, ladies and gentlemen. So come along for the ride. Let me know what you guys think down below in the description after you hear this list. Get your pen, pad, and paper ready. You don't want to miss this. So first up, Prospect Capital Corporation. The ticker symbol for everybody on podcasts is P as in Paul, S as in Sam, E as in Eric, C as in Charles. Let me go through these items quickly. 11.58% based on $6.27 per share. That's P as in Paul, S as in Sam, E as in Eric, C as in Charles. 11.58% for all of you. Do your own due diligence on all these that I'm about to tell you. This does not go along with everybody's investment strategy. Now, let's get on with the next. A as in Apple, G as in George, N as in Nancy, C as in Charles, otherwise known as AGNC. We go up to 15.24% at $9.47. So if you purchase at $9.47 or less, you will be into the 15% category annually for as long as they give out dividends. If that's 10 years, if that's 5 years, if that's 20 years, that's what you will be getting on the money you put in right now. If the price of a dividend stock goes up, the dividend yield goes down. Just to give you an idea, if the stock price goes down, the dividend yield goes up. That is a return on your investment. Let's next up. M as in Mary, V as in Victor, O for MV Oil Trust. 17.95%, ladies and gentlemen. at $11.87. So if you're in that ballpark where the stock is $11.87, $11.90, you're going to be in the 17.8, 17.95% range. And if it drops below $11.87, meaning $11.80 or $11.60, that means it will be over into the 18% annually on your return for as long as they give out dividends. Now, again, I'm going to reiterate, you need to pay attention to your investments. You are the CEO of your life. You're the one running your portfolio. Therefore, you have to have news and updates and alerts, because if there's ever an announcement that somebody stops their dividends, the stock price will go down. All right, just keep that in mind, and it'll drop rapidly too. So don't think that you can just set it and forget it. You always want to have alerts. So if a price or a stock drops below a certain value, you want to be alerted by that. All right, because that means that you would lose value on your stock, even, and that also means, depending on if they drop 20-30%, they could end up canceling their dividends. All right, now Analay Capital Management is next, 13.38%. I messed up the crescendo because this was supposed to be before the 17.95, but nonetheless, we're going to build back up. And N as in Nancy, L as in Larry, Y is the ticker symbol, 13.38% annually. And again, we're into the real estate investment trucks. Now, we're up next, IVR, Invesco Mortgage Capital. Their dividends have fluctuated over the years, but they're back at 14.83%. And again, that's I as in India, V as in Victor, R as in Robert, Invesco Mortgage Capital, 14.83%. Next up, Granite Point Mortgage Trust. Oh yes, ladies and gentlemen, you heard. GPMT, G as in George, P as in Paul, M as in Mary, T as in Tom, 16.63% at a stock price of $5.07. Do your own due diligence, ladies and gentlemen. Make sure you get your stocks, your free stocks from Robinhood or Webull. If you haven't already, they're going to be down below in the description box, below the video. Now, Two Harbors Investment Corp, otherwise known as Two, otherwise known as T as in Tom, WO, at 18.66%, ladies and gentlemen. That's right, real estate investment trust. If the stock prices go up or go down, regardless, whatever you put in now, you're going to be earning over 18% annually for as long as they give out dividends. That deal I like. Chimera Investment Corporation is next. Again, also at 18.66% at a $4.93 stock price or a $5.16 stock price. Unbelievable. 18.66%. C as in Charles, I as in India, M as in Mary is the stock symbol price. Next up, Orchard Island Capital, 18.71% annually. The ticker symbol, O as in Oscar, R as in Robert, C as in Charles, ORC, $10.32 price today, 18.71% dividend annually. Do you like these? There's many of them, ladies and gentlemen. How about Armor Residential REIT, which is ARR? How about that one? 18.75%. And at $5.15, it looks like things are changing or tilting after hours. But nonetheless, 18.75%, ladies and gentlemen. Now, let's see where else we're going. We have to talk about ETFs. You want to play a little bit safer? You want to go with one of the better ETF index funds where you could earn, well, on average, you're going to be around 9% annually for the stock price increase with ETFs. But there's also a little dividends that come with it. It's only 1% or something like that. But nonetheless, a dividend stock over time generally creates 9% increase in price annually, dollar cost average your way in, but we're going with the VOO, ladies and gentlemen, the Vanguard 500 Index Fund. VOO, this is not dividend related. All right, I told you I'm going to have a little bit twist for you because we want you to have safe, we want you to have a little riskier, but we want you to be safe with your money most of all, right? Next up, VTI. V as in Victor, T as in Tom, I as in India, Vanguard Total Stock Market Index Fund, ETF. Also, once again, it goes along the same lines where you are dealing with a 9%, 8%, 10%, 11%, depending on the year. I believe 2023 is going to be a good year for ETFs. I also believe 2024 is going to be a very, very good year for ETFs, and I believe it's going to be higher than 9 or 10% return in 2024. You'll have to come back and visit this, but do your own due diligence, ladies and gentlemen. All right? Make sure that you pick what fits your investment style. Next up, Technology Index Fund from Vanguard. V as in Victor, G as in George, T as in Tom, and again, along the same lines. You know technology's coming. It's always on the forefront, and therefore, you would think a great return would come your way. Now, we're going to get into something new. If you lasted this long, how about Microsoft doing backdoor moves, just like you would expect? Microsoft signs deal for AI computing power with NVIDIA-backed CoreWeave that could be worth billions. CoreWeave is not on the stock market, but Microsoft is. So now you have to make a decision from this article. I'm going to leave it down below in the description if you want to go ahead and read this. But that should be on your watch list, right? So you should be going, well, where's CoreWeave's stock price? Where's their stock at? Well, they might be private. You're going to have to look into that, ladies and gentlemen. And guess what else? NVIDIA has invested $100 million in CoreWeave, which in April was valued at $2 billion. All right? CoreWeave offers NVIDIA graphic cards that other companies rent out. Microsoft agreement with CoreWeave could be worth billions of dollars over multiple years. People familiar with the matter said, you got that right, and I agree with this. So therefore, we're looking at Microsoft. Maybe Microsoft's a good time to get one of their stocks, right? Get their shares of stock. Maybe it's also a good time to go find out where CoreWeave is and what they're planning on doing over the next year or two or three. Because anytime they mention valuations, I'm thinking, hold on, are they going to bust out on the stock market? Should you try to get in early? Think about it. And now we're going to go with the fallen soldier stock, the Icon Group. Their stock price has went down. People are saying they're in trouble. They're saying this fund is not what it's supposed to be. The stock price has plummeted. So now I'm going to have to show you this. Now, if you decide to invest in this, you're going to have to do your own due diligence for sure, because anytime a stock price plummets, they generally start pulling the dividends, all right? Either altogether or they reduce the dividend amount. So when you see 36.26% return, this is something that you have to, if you decide to go in for this, you're going to have to seriously consider this could be a possible L. They could actually have reduced stock prices and reduce or take away all of their dividends, which would turn this into zero if they take away their dividends, and the stock price going from 22. In fact, I'll show you what's happened over the last month. It went from 30 to 22, losing 26.69% of its value. Let me show you what's happened in the last 6 months. 50 down to $22.06 means 56% drop in value. Does this mean opportunity? Some people would take a risk. Some people may not. Now, I personally will take a small risk, very, very small risk that I might add. I will have to get a few shares because this is too tempting in the 37 percentile, 36% price point, and Icon. Just so everybody understands, they are into energy, automotive, food packaging, metals, real estate, and home fashion. So they are diversified. But their price is down. People are saying it's not what it says it is. So it's up to you to determine if you want to get in on this dividend yield of 36.26% or stick with something a little more reasonable. And I will add two more for you before we end this. JEPI, JEPI, and JEPQ ETFs by JB Morgan. That'll get you around 11.5 to 12.5%. 11.5, 11.4% will be at the JEPI, JEPI, and the JEPQ might be around 12.5 to 12% return, which is pretty good because they give out dividends for both of those. So those two are stable and they're with one of the Fed banks. So hopefully you guys wrote all these down. Let me know what your analysis is of any of these stocks. Join the conversation down below in the comment section and make sure you please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, ladies and gentlemen, but if you can lock in 15, 14, 13, 12% annually for however long the stock pays out dividends, that is a bonus. All you need is a few years at these high priced dividend rates. All you need. In the case of the Icon Group, all you need is basically 2.5 years to double your money or less. In the case of some other ones at 18, 17, 16%, you need like 3 or 4 years to double your money. But keep in mind, if you do dividend reinvesting, meaning any of the dividends that come out, instead of you collecting it, you reinvest automatically. Now you have your money working for you on steroids. And now you're going to double your money much, much faster. So that's how Warren Buffett has done it over 40 years, ladies and gentlemen. All right. Join the top 1%ers. Join the top 10%ers on how they create wealth. That's what you guys have already known. You know how to do it. You just can't be scared. And with all that said, keep your head up. Keep moving. And I'm out.